Hello, I am Richard Stoeckel, Associate Portfolio Manager here at Boyum Wealth Architects. Artificial intelligence may seem simple when we use things like a chatbot or other LLM, but an enormous and complex value chain makes each interaction with AI possible. It includes semiconductors, servers, data centers, electricity for the data centers, software for the large language models, and the business is finding new ways to use these technologies. This week, I'll walk through three charts that put the AI investment theme into perspective. So as you can see here, data center construction spending has accelerated significantly since the launch of ChatGPT in late 2022 and has now surpassed spending on traditional office construction, as you can see on the right side of the graph here. These facilities require more than just computer chips. They also need land, power, cooling systems, security, networking equipment, and continuous maintenance. This shows that AI is not simply an investment in a few technology companies, and its growth is affecting a much broader group of industries and the overall economy. The Magnificent Seven, or Mag 7 technology companies, have substantially outperformed the broader market since 2020, reflecting optimism around AI and their strong earnings growth. However, these stocks have also experienced significant swings as investors debate whether the hundreds of billions of dollars being spent on this AI infrastructure will generate sufficient returns. History suggests that transformational technologies often take longer than expected to produce profits. Even if AI's long-term potential is real, the path is unlikely to be a smooth one. However, history offers an interesting counterpoint here. When new technologies become cheaper and more capable, they often lead to broader adoption and entirely new use cases. Building on the earlier slide, technology companies continue to generate strong earnings growth, but their valuations also reflect high expectations. The information technology sector currently trades at approximately 21 times expected earnings. Valuations do not tell us what markets will do tomorrow, however, but they can help us understand how much optimism may already be reflected in prices. Other sectors also offer attractive earnings growth potential at lower valuations, reinforcing the value of maintaining a diversified portfolio. And that is it for this week. The bottom line is that AI is a powerful long-term trend, but it extends well beyond a handful of familiar technology stocks. For investors, the goal should not be to predict which individual company will ultimately win. It should be to maintain a balanced portfolio that can participate in innovation without becoming overly dependent on one company, stock, or sector. As always, please reach out if you have any questions, and thank you for watching.